You, as a trader and investor, but as a trader also, understand that when you build a base like that, one of two things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe is going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.
Hey, I'm Stephen, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So a lot's happened in the last year or so. ARK Invest have gone from being the laughing stock of the investment community globally to absolute rock stars, and justifiably so. And the core reason behind this enormous sentiment shift, and why ARK Invest are now getting the respect they deserve, and why billions upon billions of dollars of money are flowing into their ETFs every month? Simple. They were right. Dead fucking right about Tesla stock when everyone else thought they were mad. And why is it that ARK Invest was so right when everyone else was so wrong? Why ARK Invest had the confidence and the courage to put out a ridiculous sounding price target on Tesla stock only for the market to prove them correct? Well, it's possible I let ARK Invest borrow my time machine. A more likely scenario, however, is that ARK Invest actually engaged their big brains, did some thinking and reasoning. Rather than reasoning by analogy, they reasoned from first principles and determined that there was an enormous opportunity both in terms of electric vehicles and, more importantly, autonomous robotaxis. So in this video, we're going to look at some of ARK Invest's research on both of those topics from their Big Ideas 2020 report. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to Webull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. So here we are looking at the ARK Invest Big Ideas 2020 report. There's a link in the description to the full thing. I do recommend you guys check it out. But honestly, I know most of you are lazy motherfuckers and would rather just watch me read it and share some thoughts and opinions, so maybe there'll be a few more installments in this series. In this particular video, we're just focusing on 2 key things that relate to Tesla: the electric vehicle opportunity and the autonomous ride-hailing opportunity. Electric vehicles. 4 years ago, the Energy Industry Administration and other forecasting agencies estimated that EV sales will total a few hundred thousand... Oh god, this is going to be a long video. Estimated that EV sales would total a few 100,000 units in the early 2020s. After EV sales hit 1.45 million units in 2018 and an estimated 2 million in 2019, the same agencies now forecast roughly 6.5 million in 2024. ARK's thesis for the evolution of the market differs dramatically. I just want to jump in here. That's a low-key savage moment for those of you that haven't picked that up yet. Gentle, but the underlying communication there is basically, you guys are morons and let us explain why. Based on Wright's law, we forecast EV sales will be 37 million units, 6 times higher than the forecasting agency's consensus estimate for 2024. Forecasting agencies the world over historically have an abysmal track record of anticipating and predicting adoption by consumers of new, disruptive, innovative forms of technology. And I think stock analysts' reliance on these boneheaded projections that don't account for things like declining cost curves, economies of scale, overall costs of maintenance, total cost of ownership, price parity, none of that stuff whatsoever. Stock analysts relying on these stupid projections, no wonder they're coming up with such absurd price targets and completely misread the potential of Tesla the company and therefore Tesla stock. If they're relying on these estimates and thinking the entire global EV market is going to be, let's say, 6.5 million units in 2025, no wonder they have absolutely no idea. No wonder they're willing to ignore Tesla's own projections, their own rate of growth. I mean, that's probably a more important data point than the projections from these numbnuts. But hey, let's ignore what Tesla told us they're going to do. Let's ignore the rate that Tesla's building new factories and facilities and how quickly they can ramp production. Let's ignore their product pipeline. Let's forget about all that. Let's rely on these projections and work backwards from there. I think this is one of the key reasons why so many analysts totally misread Tesla stock and still today are putting out such embarrassing research. Autonomous ride-hailing is likely to be affordable. Adjusted for inflation, the cost to own and operate a personal car has not changed since the Model T rolled off the first assembly line. What an incredible fact. ARC estimates that, at scale, autonomous taxis will cost consumers 25 cents per mile, spurring widespread adoption. And we can see the cost per mile of a personally owned vehicle here, basically no change since the Model T. Keep in mind, of course, that the actual features, the functionality, the safety, blah 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 has improved in vehicles. That does account for some of the reason why the costs haven't actually declined. You buy a car today, you get lots more in the vehicle, but the point still remains. Nothing's really changed in terms of the cost of personal transport, but autonomous robotaxis are going to see a dramatic downshift in that cost, which is going to make this a much more viable option for many people around the globe. Autonomous platforms could command platform fees exceeding 30%. So what ARC are talking about here, for example, is if you're a Tesla owner and you deploy your Tesla as an autonomous robotaxi, how much of a cut of that revenue does Tesla take versus how much do you get? Although ride-hailing companies take 20 to 30% of revenues today, autonomous technology providers could collect higher fees as they provide more value to consumers through cheaper, safer, and more convenient services. Moreover, autonomous platforms should evolve into geographic monopolies, eliminating some of the competitive pressures that ride-hailing companies are experiencing today. And just for reference, we can see platform fees here. Over on the left, we've got digital stuff, Kindle, Roku, Groupon, blah, 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 YouTube, etc. By the way, shout out to all the YouTube creators. For those of you who don't know, YouTube takes almost 50% of the total revenue generated on each channel, and creators receive about 55%. A little bit of a tidbit. We can see here Lyft, 26% platform fee, and Uber just 23%. So there's potential here for this ride-hailing service to be even more profitable for the company running the service, Tesla in this case, than an example like Lyft or Uber. And just remember, every single Tesla sold for the last few years has come with the right sensor suite to enable fully autonomous driving in the future once the software problem is solved. Already has the necessary hardware. In other words, in the future, Tesla will be able to deploy robotaxis instantaneously to the majority of its existing fleet, which is already well over 1 million vehicles strong. This means there's going to be potentially a huge number of revenue sources for Tesla to take that 30% platform fee for autonomous ride-hailing services. Time to talk some numbers. The winning autonomous ride-hailing platform should be worth roughly $1.4 trillion, with a T, trillion dollars today. Based on Waymo's and Cruise Automation's missed deadlines for driverless commercial service, ARC pushed out its autonomous adoption curve by 1 year. If commercialization were to take place 1 year later than we had anticipated, future cash flows from autonomous ride-hailing should be worth between $1 to $2 trillion today. And we can see ARC's estimates for autonomous ride-hailing cash flows during the next 10 years. Today, the valuation of these companies should be $1.4 trillion. By 2024, the valuation for the ride-hailing platform should be worth about $5 trillion, and by 2029, around $9 trillion. So despite Tesla stock's insane run, the entire market capitalization of Tesla today is a mere $800 billion. ARK Investor talking about a market valuation of all the ride-hailing companies combined, the leaders in this space, totaling around $9 trillion in 2029, about 10 times Tesla's current valuation just in the ride-hailing opportunity. So the question becomes, in 2029, what share of that $9 trillion opportunity will Tesla take? Will it be 1%, 5%, 10, 25%, 50%? Let me know in the comments below. What percentage of all miles driven in autonomous robotaxis in 2029 will be driven in Tesla robotaxis? Today's ride-hailing companies are unlikely to sustain current valuations in the autonomous future. So, spoiler alert, if you currently own Uber stock, etc., pay attention to that. Ride-hailing company platform fees will probably drop from 20 to 30% today to 1 to 5% as they evolve into lead generators. The majority of fees will go to ride-hailing platform providers that own and develop autonomous technology. So this is a really important point. ARK is suggesting here that in the future, it is the companies that own and operate the hardware, the autonomous electric vehicles. They are the companies that will get the lion's share of the revenue and the profits. Companies like Uber and Lyft, just to survive, may need to transition to glorified lead generators, relying on their brand, but actually having a partnership with somebody that has the hardware that they didn't develop themselves when they should have, or weren't able to do, couldn't be bothered, etc. This is how things are going to play out in the future, according to ARK Invest. So be careful if you're an investor in a company like Uber, Lyft, etc. And we can see the valuation disparity too between ride-hailing companies, e.g. Uber and Lyft, and autonomous ride-hailing platforms. Look at the valuation discrepancies ARK is projecting out into the future. $9 trillion in autonomous ride-hailing platform valuations and just $500 billion in total market capitalization for all of the companies that previously operated ride-hailing platforms and now will just be glorified lead generators. Sizing the opportunity. ARK believes that the autonomous ride-hailing opportunity should be worth more than $1 trillion today. $5 trillion by 2024 and $9 trillion by 2029, and we can see that projected out here. Very interesting, just for comparison's sake, the 2019 total market capitalization of all ride-hailing companies, $0.2 trillion. The 2019 total market cap of all automakers, $1 trillion. And the total market capitalization of the entire global energy sector, literally what is powering the entire planet, the global economy, $7 trillion. Yes, the autonomous ride-hailing opportunity is bigger than the entire global energy sector. Let that sink in. And now, are you guys ready for the mic drop moment? Not only is Tesla going after this colossal $9 trillion opportunity in autonomous ride-hailing, but of course, they're also going after the entire automotive industry, which is valued at around $1 trillion. But look at this, the energy sector. That's right, batteries, solar, Autobidder software. The energy sector today worth $7 trillion, and Tesla is going to disrupt the entire thing. Virtual power plants, distributed utility, solar on the rooftops, storing energy in battery, arbitrage, energy market participation with Autobidder software. Let me put this in perspective. Tesla is going after and stands to take an outsized share of $9 trillion plus $1 trillion, that's $10 trillion, plus another $7 trillion, the energy industry. Close to $20 trillion opportunity right in Tesla's crosshairs. Now certainly, they're not going to get 100% of this, but just think, look into the future, look at how fast Tesla's progressing, look at how far ahead of everyone else attempting to get these same opportunities in their sights Tesla is. So if you find yourself wondering, can Tesla stock continue to grow in value? Is Tesla stock overvalued today? Does it make any sense, or is it completely insane? All you need to do is ask yourself the question, how much of this enormous opportunity do I personally believe that Tesla's going to take a slice of? Are they going to get 1% of the global autonomous ride-hailing network, 1% of the global energy market, 1% of the global auto market? What about 2%? What about 5, 10, 20, 30, 50? Ask yourself these questions. Work back from there. ARK have done some great research on this. There's plenty of white papers and all sorts of blog posts as well. I highly recommend you guys check out on their site. Look up some videos by Tony Seba. I've got a few on my channel. Great content, great projections about the future. What I think's happening at the moment is most stock analysts are completely clueless to the opportunity Tesla's going after. Almost none of them are conceiving the kind of numbers of electric vehicles will be produced in the future, nor the number of autonomous vehicles, nor the size of this opportunity. ARK Invest are on the right path. This is why a few years ago, with their crazy $4,000 Tesla stock price target, everyone laughed at them because nobody was looking at these numbers and thinking about the opportunity in front of them going, geez, 9 trillion, 7 trillion, wow, this company could be worth a hell of a lot more than it is today. ARK Invest were thinking. I'm trying to draw attention to this research to help people realize, because intuitively it just doesn't feel right. How on earth could autonomous robotaxis be a more valuable opportunity than the entire global energy market? And how on earth could one single company have the pole position in taking an outsized share of autonomous ride-hailing and energy in the future? Never mind the automotive stuff. Exactly. This is why I'm so excited about Tesla stock. This is why I still personally believe that we could easily see a 10x from here over the next decade on Tesla's market cap. Yes, I won't be surprised to see Tesla's market cap in 2031 around $8 trillion, give or take. That's not an estimate. That's not a prediction. I'm just telling you guys, if that takes place, I will not be surprised. The reason it will occur, if it does, is because Tesla captures a large share of autonomous ride-hailing and a large share of energy and is producing millions upon millions of vehicles per year. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to Webull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with Stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.